Hey guys, welcome back. In today's video, we are talking about BLACKROCK buying AMC, how shorts can't unwind, where they're hiding the shorts, and many more in this video. First, we take a look at this. BLACKROCK has recently purchased 7% of AMC. They also purchased 7% also of ChargePoint recently as well. It's the small and mid caps lows in. So this is obviously what we're looking at. Now, firstly, something that we have to understand is that institutional ownership for AMC has gradually been going up. Now, that itself is already the first signal of understanding where money is going. It's understanding what industry they want to invest in and what company within that industry they obviously want to invest as well. BLACKROCK, obviously, given its reputation, we understand that when they do decide to go into a stock, they obviously are trying to go into it for a good investment. So we have many indications right now that AMC on its own is a good investment. Remember, BLACKROCK doesn't need AMC to squeeze. They will make plenty of money, and what they do is that they want to obviously invest in safe investments, and that's precisely why they bought into AMC. And so from that standpoint, what we can understand is that fundamentally AMC is of course a good investment. And speaking of understanding, institutions are buying in, something that's recently been going on, and you can see Bigham's talking about this, is I don't know where this $1.50 stuff is coming from, but we are not going to $1.50. So there's been talks about obviously AMC going to $1.50. Now, like we talked about and understanding the fundamentals, which I'll be talking about in a second as well, is firstly we have institutions buying in. We have BLACKROCK buying in. They don't want to buy into investment at $4.44 and it drops down to $1.50. That's over a 50% drop. Now, that's clearly not the investment that they want. And remember, they only want investments that are obviously safe and would give them a good return. So obviously this talk of 150, now unless something were to happen, for example, the whole of AMC were to go bankrupt or showing signs of bankruptcy, or they close down all their theaters or something that is crazy, then you obviously see this. Or if the shorts decides to put hundreds of billions of dollars instantly on creating synthetics and suppressing AMC, then I don't understand any reason for why we're seeing $1.50. But again, everything is obviously up for debate. Furthermore, another reason to understand this is you can see this, the TLDR. Cinemark is priced at almost 4 times AMC on PS is not logical based on AMC's operating leverage, debt pay down, and expanded revenue streams. Industrial recovery this past Q3 just ended, and through 2025-2026 is going to review what we knew. So when you take a look at everything that we talked about, is understanding the fact that institutions are buying in, and it's understanding about what AMC is doing as a company, like we talked about the money invest, the money that's being newly created and generated, and taking a look at their finances, their fundamentals, you understand that if anything, AMC is not showing any signs of going down, but rather showing signs of going up. And that's of course when we are faced with a fair market. We know that AMC is already heavily undervalued. We know that AMC should be at a way higher price. The only reason why we're not seeing AMC at a high price right now is because of the manipulation and suppression. But it's precisely understanding that AMC should be trading at a way higher price from every single factor that you look at. You understand that this is why people are investing, whether it's the institutions, whether it's the retail. Now, of course, the retail is always known what it's going on, but what we have to understand is that of course we are being suppressed, and that's why you can see from the factors like we talked about, why all of these things is happening. And so just going back to what we talked about in terms of this $1.50, like I said, we are heavily undervalued because of the fundamentals. We are heavily undervalued because we have institutions buying in. These are all signs of understanding that people want to buy AMC. And if people want to buy AMC, why would the price go down even further, more than 50%, of course, to $1.50? Now, another reason to understand this is obviously understanding, where we can go. And now this isn't, again, this may be something that everyone has seen, but what we have to look at is on the 28th of October 2008, the price of Volkswagen common shares exceeded 1,000 euros. And now this is obviously talking about the short squeeze. This is what everyone does when they compare AMC with the short squeeze, when they don't have an understanding of where it can go. And one of the reasons that I want to talk about is understanding how AMC was able to reach over 1,000 euros. And remember, the things then and the things now are completely different. More money is involved, more naked shorts, more synthetics are being created, more manipulation has been done. This has gone for a way longer time, and so that's why the situation is different. And so this isn't to obviously is to make a comparison, but it's to also understand that the situation is different. And so when we take a look at where AMC can go, this is where we have to obviously compare it with. And it's also understanding that precisely because it can go that high, it's obviously posing a massive threat for the short sellers, and that's why they want to suppress us. You can also see, looks like the Credit Suisse unwind has taken a turn for the worse, where UBS recovery and emergency plans will be revised due to the takeover of Credit Suisse. And you can also see they further went on to say integration of Credit Suisse requires adjustment by UBS to ensure continued resolvability. So this is something that we've always known. The reason why Credit Suisse went down was because they had to take in the toxic swaps from kohrs. They have the toxic swaps of GME and AMC. And clearly those toxic swaps are damaging because it took down kohrs and then it took down Credit Suisse. And then after that, UBS took on Credit Suisse. But what we can see is that clearly there is something wrong with the finance sheet to the point where after UBS took under their wings Credit Suisse, UBS are also starting to show signs of failure as well. This isn't the first time where we've seen something about Credit Suisse damaging and impacting UBS, and this won't be the last time either. So we clearly understand is that shorts are having a tough time, that how they're trying to obviously repackage these shorts, how they're trying to give it off to other people, how they're trying to find other ways of getting through all these loopholes. These are slowly starting to crumble, and we can see that. Remember, this is just one part of it. This is just one firm out of the many firms who have these swaps, who have created synthetics for AMC and GME. And so you can see how they're all going to start falling like dominoes very, very soon, especially when you take a look at the reverse repo. So $251 billion. Now you may think that it's actually gone up. So last time we looked at it was 207 and now it's 251. So it's actually gone up. But like you said, this isn't that it's going down every single day. What you have to understand is that in the long term, it is going down. And that's precisely what it's doing. It can go up, it can go down. What we have to understand is that in 1 month's time, in 6 months' time, is it still at 251 or is it at 50 billion instead? And that's the most important part, because this essentially is the ticking clock. This essentially is the countdown. When we see this goes to zero, what it means is that what was once an easy access for liquidity and capital for these short sellers, for these institutions, have now gone to zero. It doesn't mean that it's finally the end. What it does mean is that a massive amount of the power that they had to use against us is actually faded and gone to zero. And that's why we pay close attention to this. And so you can see that whilst it's at 251, it doesn't mean that they're suddenly alive again, because in the long term, it is going to go down like we have seen in the past. As always, none of this is ever financial advice, so do take it as a grain of salt. Make sure to do your own due diligence and research. Now, the thing we're looking at is from Robert, and you can see smart of City Securities to put it under TWN on the threshold security list for all the meme stocks. Enjoy that T+1. And you can see Biotech also replied to this is interesting idea. Look at ProShares, the TWN. The net assets figure represents the total value of assets held by the ETF minus its liabilities. TWN net assets are just 47.18 million, seems too low to high AMC short positions. But if the market maker is using the ETF like a temporary way station, they avoid settlement obligations on certain threshold securities. They give the illustration of transferring out the threshold listed stock. After that, it's moved back to the ATS and into a swap. So this is what we see with another potential way of obviously how they're hiding the short, and you can see it's obviously trying to buy more time to delay. And further on, Citadel, Susquehanna, State Street, and others, as well as all market makers, can be so devious and exploit loopholes most don't even know exist. And this is what we're looking at. And you can see, given the net value is 47.18 million, they must be shuffling the short positions on threshold securities every day. It is a shell game, and they stack hidden FTD shares. They are so screwed. Now, remember, this is something that is extremely possible. And the reason why I say this is understanding that they obviously, and it's a very key part, buying more time to delay. Some short sellers, some institutions, they don't have the ability to hold on to these positions. Why? Because it's extremely toxic. Like we talked about, UBS decided to hold on to these positions, and you can see how it got to them. Credit Suisse decided to take the positions, and you can see how it got them. So some shorts obviously want to continuously reset these positions to buy more time to delay, and that's why we're seeing this 47.18 million that they are shuffling the short positions on threshold securities every single day. Like we said, they have many methods they've used in the past before to continuously kick the can down the road. Whether it's we're looking at the reverse repo, whether we're looking at this, whether we're looking at the naked shares, the options, the FTDs, all of these methods that they've used in the past before. You know, again, there's a lot more than what I've just listed. It's all for one purpose, to delay the whole process. They want to turn it into a game of tug of war between the retail institutions and see who give up first. And luckily for us, the retail investors, is that we know everything that is going on. It doesn't cost us a single dollar to hold on to our shares, but it costs the shorts millions, hundreds of millions, and even billions every single day to hold on and create these short positions. And guys, thanks for watching. I'll catch you guys next time.